Welcome to the Statler Financial Radio Show with Phillip Stattler. Have a question for the show or need assistance with your retirement plan? Give Phillip a call today. 863-285-3815. 863-285-3815.
Inflation, supply chain issues, and a dip in the GDP are factors that have some economists predicting we are headed for a recession. So you might be wondering if now is a safe time to retire. We'll talk through that today. We're so glad you're here with us on the Statler Financial Radio Show with Phillip Stattler. I am Jen Rezac alongside, and boy, Phillip, this is a big topic right now. It's not a sure thing, but a lot of economists believe we are inching toward a recession here in the U.S., and we might even already be in one. You know how it takes a little time for those numbers to come out and that analysis to come in. So what are you telling your clients right now about recession concerns?
Well, we have a couple of discussions. One is, you're right. We are definitely seeing GDP was negative for the first quarter, but that's really the first reading, Jen. So they do 3 readings on the GDP, and that number can change. Usually it doesn't change by a huge number. So I suspect that if it was negative in the first reading, it'll be negative in the rest of them. I'm hoping it'll just be less negative maybe. And that decline in GDP, one quarter doesn't make it a recession.
Sure.
Right. So we would look to see what happens in the second quarter. Do we still see a loss in GDP? And if that's the case, then quote, we could be in a recession, but there's other factors that come into play, right? It's not just a GDP number and that's it. We have to look at the whole economic activity. Does it really decline? Do we have people becoming unemployed? Because typically in a recession, unemployment becomes high. We see a big slowdown in production, and we see wages start to fall. And my goodness, we've not seen wages fall in the last 12 to 24 months, right, Jen?
Yeah, I mean, gosh, so many things going on right now. What are some steps to consider helping protect our money with all these things?
Well, I think that a couple things. One is I think you have to remember too, a couple things I think you have to remember about recessions is that they don't typically last a long time. I mean, they're painful. Don't get me wrong. They're painful, but typically they only last about 10 months, which sounds short, but when you're in the middle of it.
When you're living it feels like a long time. Right.
And the other thing that I've been telling clients is that, look, even if we don't go into a recession, we're going to slow down significantly, right? And so if we slow down to a growth rate of 0 instead of a recession, it's going to feel like we're in a recession because we're so used to that high growth rate, right? So if you slow down to even a 1% growth rate, it's going to feel like we're in a recession because the last 24 months, we've really been going at a much faster pace. So what do? How do we do that? Well, I think a couple of things is you want to make sure that you have enough cash built up. I mean, we tell our clients, look, you need to have $20,000 to $50,000 in money in the bank. Now, if you're a working person, not retired, then, look, you need to have 6 months of your expenses in the bank account because that's what it could take to get you through an unemployed phase or this recessionary phase as costs continue to go up. The other thing is don't trade on the headlines. And if you're trying to trade your own account, don't look at the headlines and say, hey, look, based on this, I'm going to sell or I'm going to buy. The emotional based decisions are the worst thing you can do when it comes to making trades in your portfolio. Another thing I tell people, and we're doing this right now, Jen, with all of our clients as we go through the review process, is we're reviewing their risk tolerance because life changes. And sometimes we have to make adjustments and our opinion changes as to how much risk we want to take. And so we're rerunning everybody's risk tolerance numbers to see where we are in terms of where we need to be. And just remember that it's impossible to make a perfect choice when you're trying to decide about your, based on facts and your goals when it comes to outlining what that looks like.
Yeah.
There's no perfect choice. You just have to look and make the best you can at that time.
That's a good point to keep in mind here. Just make the best decision you can based on what you know, based on facts and what your goals are. If we do find out that we're in a recession or we go into one here, Phillip, is that a safe time to retire, or should we hold off until things improve in our economy?
That question really depends. The answer depends upon what your financial condition looks like, right? If you've not gotten beat up bad by the markets tanking the last couple months, then maybe you could still go ahead and retire. But how do you know? You don't know unless you do one of the things that I preach about a lot, and that's have a written retirement income plan. If you don't have a plan, then you don't know if you can retire or not, and you don't know if it's safe to retire. So that boils down to this. You need to have a written retirement income plan to make sure that you can retire and that you can have the retirement you always dreamed of. And that's why we created the core retirement design here at Statler Financial. Listen, folks, if you're in that brink of thinking about retirement, now's the time to give us a call at 863-285-3815. And here's the deal. Get on the schedule and let's you and I have a 30-minute phone conversation. Let's see where you're at, what you're thinking, and let's see if we can help you put together the plan you need to get to where you want to go. Just give us a call and schedule your 30-minute phone consultation, 863-285-3815.
Talking today with Phillip Stattler. He is president and CEO of Statler Financial Services. He just gave you the phone number. The website is statlerfinancial.com. And there's another thing we don't want to forget about right now, Phillip, and that is inflation as an economic factor that's dominating the headlines right now. And of course, we don't even need to read about it in the media. We feel it when we go to the grocery store or when we fuel up. How important is it to get a handle on how this could impact our retirement and our future?
Jen, it's a big deal. And we're talking about two topics today that are not fun to talk about, right?
Yeah.
And they're very impactful to the everyday person out there that has to go to the grocery store. I mean, we all have to go to the grocery store. We all have to go buy fuel for our cars. Those things have gone up considerably. And so how do we plan for that? How do we maintain our current lifestyle and still be able to do the things we want to do with inflation the way it is? That's a good question. And it's having built in some factors into that income plan is going to help. I mean, yeah, Social Security, you got a nice little bump this year. Some pensions get an inflation cost of living, some don't. The other thing I would say is, and I remind people this all the time, if you have cash, a bunch of it sitting in a savings account doing nothing because they're not paying you anything, remember, in 2001, you lost about 7%, if not a little bit more, because that's what inflation was. Mm-hmm. And so you lost that in purchasing power.
Boy. Yeah.
Yeah. And that's a big deal. I mean, if you still have a mortgage, I would say maybe we're getting too late to even think about this, but I think mortgage rates are still low. They're not as low as they were, but they're still historically low. You may want to refinance to see about looking at a 15-year mortgage instead of a 30. Lock in some low rates right now before they get any higher than what they are. If you have an HSA that you can participate in, dump some money into that because that's going to help cover future healthcare costs. So just a few things. I think that planning helps take some of the edge off of inflation, but if you haven't planned, then it can really wreak some havoc on retirement.
Talk about what goes into that retirement income strategy, Phillip, to help protect our savings from things like inflation. We were just talking about possible economic downturns, even higher taxes in the future, which is another issue that we don't want to lose sight of.
Well, yeah, because it's coming, folks. We're not talking about that today, but it is coming, and you need to be prepared for it. So I think that when I look at our core retirement design, Jen, which takes into consideration some income planning, but I think the first thing that folks really need to understand is how much risk are they taking on in that portfolio, and what does that look like, and how does that compare with how much they can handle. I'm seeing right now a lot of my clients are their expectations are pulling back. They're not willing to take as much risk in their portfolio. And I think that's just human nature, given what we're seeing right now within our markets and the economy. And so I think that putting together a plan that has a portfolio that really optimizes the risk to match up with your risk tolerance number is so important right now. And that we're looking at that and making adjustments as we go to make sure that it continually lines up with your risk expectations. And the last thing I would say when it comes to that information is that, buy and hold, it hasn't worked through the last two bear markets, or last three bear markets, really. And so you need to look at tactical portfolios, somebody that's actually watching what's happening and making adjustments on a regular basis, not just sitting there with your mutual funds. You're not really making any changes to it whatsoever, Jen.
Right. And there are signs that we could be heading into a recession. I've seen a number of headlines on that. Even CNN was reporting that recently. So it's probably a good idea, Phillip, to take some time to evaluate your assets and learn about those steps you can take to help protect your savings.
You're right. You can run into trouble when you have to start taking withdrawals from your retirement accounts while the market is taking a hit like it has lately. It's a tough spot to be in because whether the market is up, down, or sideways, guess what? You still need income in retirement. You can't just stop buying groceries or paying your water bill or stop filling up the car with gas just because your retirement accounts are taking a hit in the markets. Here's how I can help. Look, we can do an analysis to help you really uncover the main risks that are posing a threat to your retirement, especially stock market volatility. Look, we can stress test your current retirement plan, your current retirement portfolio, put your portfolio through an analysis to see just how much you can handle in terms of losses. And we can help start talking about solutions. Go over some potential moves that you can make to help preserve your life savings from this downside risk. Again, no cost, no obligations. Look, we just want to schedule a 30-minute phone call, non-threatening, easy conversation to really look to see, number one, where you are today. What questions do you have? What concerns do you have heading into retirement? And then how can we help you? How can we be of benefit to you to put you on the right track to retirement? Maybe it's just answering a couple questions and you're good to go. Maybe you need more help than that, and we need to actually get together. We'll find out that and more from that 30-minute phone consultation. Give us a call at 863-285-3815 to schedule your no-obligation 30-minute phone consultation, or you can go directly to our website at statlerfinancial.com, and there's a link there where you can schedule that 30-minute call as well.
This is the Statler Financial Radio Show. We'll be back.
Call Phillip Stattler today to get started on your complimentary financial X-ray report. 863-285-3815. That's 863-285-3815.
This is your captain speaking. We're expecting fair skies, a smooth flight, and about a 85% chance or so of making it to our destination. So sit back, relax, and enjoy the rest of the flight.
Would you stay on that plane? Of course not. Well, do you have a retirement plan where you probably won't run out of money? You need a plan that no matter the destination will help you get to and through retirement successfully. Phillip Stattler and the team at Statler Financial Services can design a plan to help you get to your destination as comfortably as possible, even if Wall Street or the economy causes some turbulence. Call Phillip Stattler and the Statler Financial Services team to start working on your plan. 863-285-3815. That's 863-285-3815. Get a plan designed to allow you to sit back, relax, and enjoy the retirement you've worked so hard for. 863-285-3815. Firm offers insurance services, advisory services offered through Statler Financial Services Incorporated, a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Thanks for joining us today. This is the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Phillip Stattler. He is president and CEO of Statler Financial Services. You can check him out online at statlerfinancial.com if you'd like to learn a little bit more. Again, that's statlerfinancial.com. Phillip, how many times have you heard this one before? It's not what you make, it's what you keep that counts. I think I've heard you say that before a time or two.
I think so, because that is what's important, right? I mean, if you make a lot and you spend a lot and you have nothing left over, it's just not going to get you very far, Jen.
Exactly. It's less about the number of dollars you've saved and more about the strategies that you use with your savings. And the goal is for your money to be moving in the same direction for a singular purpose, and that is your retirement. So, Phillip, what are some things we can do to get our money moving in the right direction so it's working for us in retirement?
Well, I think, Jen, that there's a couple things that I think folks need to realize, and we talk a lot about on the show here. And that's one is understanding risk and understanding how risk, if you have too much risk in your portfolio, can really and truly take money away from you. Especially if you're in that 5 to 10 year time period before you retire, or you're in that 10-year period after you retire. I'm going to say that 20-year spread there is just vitally important, because if you make a misstep, it can cost you dearly when it comes to your retirement assets. So number one is getting the risk right. Well, how much risk should you have in your portfolio? And does it really and truly match up with your risk number? And then the other part, the thing I think is important, is how much are you paying in expenses and fees that you don't see? And a lot of people say, well, I'm not paying anything. Well, if you own mutual funds, let's face it, you're paying something somewhere. And so it's important to know what those fees are and how those could be impacting your retirement also. So, I mean, those are just a couple things that will help you keep moving in the right direction.
Saving money, as we talk a little bit about what's going on with our money goals at different times, saving money is the big goal for a lot of us during our working years, right? But it's not what we're doing in retirement. Creating income is the big focus during retirement. Talk a little bit about, as we are trying to get our money moving in the right direction, Phillip, how do we take that savings and turn it into income in retirement? Because income is different from having a bunch of money saved up.
It really is. You're so right, Jen. And, it's great to save money. I think it's tremendous when folks head into retirement and they've got a nice nest egg saved up. The issue I have, though, Jen, is that folks don't switch gears. They continue to do what they've been doing while they were working in retirement. And that really becomes the issue, because if we don't make any changes, if we keep doing what we're doing, then that can be problematic as we move forward. Because in retirement, we don't have a job. We're not making money. We have to rely on Social Security, pensions. We have to rely on the money that we've put away for retirement. And we have to make sure that money is working for us. And so what I see a lot of times is people, they don't have a plan. They've got all these assets and they've done a really good job of saving for retirement, but they don't have an income plan in place. And so they just keep doing what they're doing. And that's the problem. We need to switch gears, really and truly about 5 years out from retirement. We need to be switching gears so that another 2008 doesn't come along and wipe out a big part of our retirement savings. So it's putting together that income plan. How much do I need? How much can I successfully take in income off of my plan to make sure that it lasts as long as I do, whether that's to age 80 or to age, I was reading the other day, 105. So I was reading an article the other day, this lady was 105 years old. So you need to be prepared for that longevity. And so that's the key to me is creating that income plan, because creating the income plan is totally different than saving for retirement and then having the income you need. So just kind of two different ways of thinking about things. And and two different times of life, right?
Mm-hmm.
We need to accumulate, and then we need to have a spending plan in place.
So let's talk a little bit about how we get help doing that, because when I think about other areas in life, with doctors, for example, my younger kids see a pediatrician, but my oldest has graduated from seeing a pediatrician, and now she sees a different doctor. We kind of know how this works when it comes to our health, but talk a little bit about finding the right help when we are in those accumulation years and we're building up and we're saving versus finding the right help when it comes to managing retirement money.
Well, that's a good point. Relating to the medical field is good. So, your oldest daughter now, she's no longer, a preteen. And so, we have doctors that specialize in children that are, young.
Mm-hmm.
And so it's kind of the same thing. You use a specialist when you need one. It's kind of the same when it comes to retirement income planning, Jen, because there are a lot of advisors out there that do a good job accumulating and growing portfolios. But it's a totally different animal when we have to start taking income off of that portfolio. And so it really does require that we work with a specialist that can create the income plan we need. And that's what we do here at Statler Financial. We really work hard in creating the income that folks need to make sure that it lasts as long as they do and beyond, because that's the key. We don't know how long we're going to live in retirement. We don't know when the next 2008 is going to come along and create havoc with the stock markets. And so those are areas that are important. And so we need to take all those things into consideration as we plan for your retirement income. And it's I'm not going to say it's easy, because it's not. If it was easy, everybody would be doing it.
Right.
It takes a different frame, a different a set of circumstances to put that plan together. And that's what we do here at Statler Financial, is we really and truly focus on those folks that are 50 and up, because their circumstances are different than the 25-year-old who's just starting out. And so that's what we do, is we help people get prepared for retirement so that they can retire in style and do the things they want to do in retirement. So folks, look, give us a call. Let us help walk you through that process of changing from accumulation to retirement income, because it is two different ways of thinking about money. Don't get caught up in thinking I can keep doing the same thing, because you can't. It takes a change. Give me a call. Let me start that process with you. 863-285-3815. That's 863-285-3815.
Talking today with Phillip Stattler. He is with Statler Financial Services. I'm Jen Rezac alongside. Phillip, what are some signs you see that someone needs a financial professional to work with? What are some indicators that we should talk with someone like you?
Well, I think that somebody that has a decent sized portfolio, you say, well, what does that mean? It means something different to everybody, right? But in my book, look, if you've got $150,000 put away for retirement, then this is you. You need to have a specific plan in sight. And the larger you have in retirement assets, the more you need to have a great plan in place to get you into and through retirement. So that's one thing, is just making sure that where are you at in the realm of what do you have saved for retirement. Two, I think that if you don't really understand the markets, you don't understand the financial situations, and if you're not working with somebody that their focus is not just growing your money, because I won't say it's easy, Jen, but there's a lot of folks out there. There's a lot of us that can grow your money.
Sure.
But there's fewer people that can help you keep it through retirement and create the income stream you're going to need to retire on. So I would say that's one of those things that folks need to take in consideration.
Yeah, it goes back to that mountain analogy that we've talked about before. The last time I took one of my kids on a trip where we went and climbed a mountain, it was pretty intuitive to go up. We were just going to go up. We weren't going to miss the top because it's right there and you're just working toward it. But it's when you turn around and you come back down, that's when you have to start thinking about your path back down and watching your footing a little bit more, because that's where it's a lot easier to get it wrong and you could end up going down the wrong side of the mountain. So it makes sense when it comes to our money in the same way.
Yeah, because folks, it's a good analogy, because you misstep coming down and you could end up in the valley quicker than what you want to end up in the valley, right? So you're so right. I mean, that's one of those things is, and people don't realize this, but if you've ever gone hiking, coming down the mountain is so much more dangerous than going up. And if you've not ever hiked around the mountains, you may not realize that. And retirement or life really is no different, right? So when you hit the peak of that mountain and you retire, coming down from that mountain, if you have a misstep with your finances, then it can devastate your whole retirement. And I think of those people that thought they were going to retire in 2009, right? They if they got caught up in that and didn't make any changes to their portfolio soon enough, a lot of those folks lost half of their money in the market. And so I know several that I had talked to that didn't move forward, decided they had to work a couple more years because they couldn't rebound from that devastation to their retirement funds. And that's what we don't want to see happen. That's why we're here to help coach people into and through retirement. And it's a big deal. We need to make sure that the closer we get to retirement, the less and less risk we have. And you don't know what that risk number is if you've not gone through the process to determine what your risk number is. And that's really the starting point for us, Jen, is we want to know what somebody's risk number is. And then we design everything around that. We design the portfolio around that. We design the income plan around that. All that based on how much risk somebody is willing to take. And having the right tools in place to come up with that number is a big deal. And that's what we do here at Statler Financial. Look, if you're getting close to retirement, if you're 5 to 10 years out from retirement, or you have already retired and you're in that 10-year window after retirement, folks, please don't play around with your stuff. Talk to somebody that knows the planning process to put together the income plan for retirement. Give us a call here at Statler Financial, 863-285-3815. That's 863-285-3815. Let us help guide you into and through retirement with a income plan and a risk analysis of your current portfolio. Again, that number is 863-285-3815.
Retirement isn't a sprint, it's more like a marathon. But how do you plan for something when you can't see the finish line? That's coming up next. Stay with us.
If you have a retirement plan and would like a second opinion, call Statler Financial Services today. 863-285-3815. That's 863-285-3815.
From the pitch, swung at a little too soon.
Strike three, you're out.
To the joke told at the wrong time. To barely missing your connecting flight.
This is the final boarding call for Flight 109 to Chicago.
Timing is everything. The same is true for your Social Security benefits. Take them too soon and you can leave a lot of money on the table. Take them too late and you might spend down too much of your savings. Everybody's situation can be different, but taking your Social Security benefits at the right time is important for your retirement success. Phillip Stattler at Statler Financial understands Social Security and can help you make decisions that are best for you and your retirement dreams. Call 863-285-3815 to start optimizing your benefits. With Social Security, timing is everything, so don't delay. Call Phillip Stattler at Statler Financial today. 863-285-3815. That's 863-285-3815. Our firm offers insurance services and is not affiliated with the U.S. government. Advisory services offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida.
Thanks for joining us today. This is the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Phillip Stattler. He is the inaugural Highlander Award winner for Financial Representative of the Year. He is president and CEO of Statler Financial Services here in Sebring. StatlerFinancial.com is the website if you'd like to learn a little bit more. And Phillip, one thing that I know about retirement, it is not a sprint. It's more like a marathon. And even for people who aren't avid runners, you understand the basics here, the difference between running the 100-meter dash and a marathon, right? With a marathon, you have to pace yourself so you don't wear yourself out before you get to the finish line. And that is not what you're doing with the sprint. And I've never run a full marathon, but I've run a half marathon before, Phillip. And even though I couldn't see the finish line, I knew where it was. I knew what the route was, and I knew what I needed to do to get there. With retirement, you don't even know where the finish line is. That's the big challenge here, right?
You're right. That is the truth. And I've not ever done a half marathon. About the most I've done is a 10K, but I have done some Olympic distance triathlons.
Yeah.
Those things, on a map, like you said, where the finish line is, but it's a long haul. And so, when we look at retirement, there's some variances there, right? Mm-hmm. There's people that want to retire early at 62. There's people that want to at least get to Medicare age at 65 before they retire. There's those folks that are comfortable and want to work until full retirement, which depending on your age is 66 and some odd months or 67. And then there's those long haul folks, they're enjoy what they're doing. They don't need to retire. And so they don't need to start retirement until 70 or, and some people don't even retire to then, Jen. They just start taking Social Security because you have to at that point. You don't got a choice. So, but that's the thing is looking at what makes the most sense for you. Not just from a financial standpoint, but from a health standpoint, from a family standpoint, what do those things look like for you? Mm-hmm. And then how do you put that plan together to make sure that when you do retire, that you're going to have the retirement you always dreamed of, because nobody wants to retire and then have to just sit at home and twiddle their thumbs. Yeah.
Right. Exactly. And the big money part of this, if we're living longer and retirement is lasting longer, that means we have a lot more years of making sure our money will last. We have a lot more years of things like paying taxes and healthcare costs and all of that. And Phillip, when I mentioned taxes there, that's a huge thing that we don't want to overlook when it comes to retirement. And it's so big. This is what actually brought you into helping people with retirement, because you come from the tax side of all of this.
You're right, Jen. I do. And that is my background. And so, I remember back when I first started looking at financial planning and thought, I'm sitting here doing folks' tax return and it's time for them to get an IRA or time for them to retire and roll their 401k into an IRA. And so I sent them down the street to a couple of financial advisors I knew, thinking that they would be well taken care of. Only to sit down with them usually the next year, because obviously I do taxes. I only saw them once a year.
Right. And
what did they do? They were in the greatest and latest limited partnership, or they were in some high priced variable annuity, or, they just weren't being taken care of.
It wasn't what you had in mind with what was happening with them.
It wasn't. Right. And so, my degree, when I graduated from Florida State, I had a degree in accounting and a degree in finance. And I'll be honest, I loved the financial planning side of things. But when I graduated from college, the only way you got on that side of the business was you were commission based. And I'm not a salesman. I never have been. And to this day, I'm not a salesman. And so I knew I could never make a living on that side of, of the table. And so I went the accounting side. I like taxes. That's the area I went into. But I realized early on in my career that I could do a better job than what I saw my clients coming back to me with.
Hmm.
And so I decided then I could jump into financial planning and leverage my tax practice to those folks that were getting ready to retire, and definitely put them in a better position than what I saw happening down the street. So that's what I did, and so we've developed that over time. And then about, I don't know, 7, 8 years after I started adding that to my tax practice, I said, you know what? This is much more enjoyable. It's watching people be able to retire and being responsible for helping them do that. That's just so much more satisfying. And so, hey, I sold out of my tax practice and started doing this full time. And it's been a rewarding career to watch folks be able to actually benefit from my expertise and be able to retire when they want to and get the income that they need in order to retire. And so, there's a lot of folks out there that can help people grow their portfolios. There's not as many folks out there that can help you keep it and draw income off of it the way that you need to. And that's really and truly what that's what I've focused on, is helping people retire and have the income they need to retire comfortably and to be able to enjoy their retirement, and so for folks out there who don't really have an income plan, don't have a retirement plan. Well, they've got a retirement plan. They're financial advisor, their brokers say, just keep putting money into this. We'll grow it. But then when it comes to the distribution phase, they say, well, we'll take it out of this bucket or we'll take it out of that bucket with no plan in place. Folks, give me a call. Let's walk you through our process to help you develop that retirement income plan so that you can retire in the way that you want to, the quality of life that you really and truly desire and deserve. Give me a call and let's start that process. 863-285-3815. That's 863-285-3815.
Talking today with Phillip Stattler. He is president and CEO of Statler Financial Services, and I'm Jen Rezac alongside Phillip. So important, as you were just talking about, that we don't overlook the impact that taxes can have on our income over the course of our retirement. Definitely something that we want to be aware of. The other challenge, as we talk about not knowing where that finish line is for retirement, is how do we grow enough or make enough that it'll last the whole time? And that's where we can run into some problems with things like volatility and maybe having too much risk. Because if we're worried that we're going to live a long time in retirement, we've got to make sure that we've got money for a long time. How do we make sure we don't overdo it with the risk when we're trying to get some of those bigger gains to help us make our money last?
Well, and that's a valid point, Jen, is that if we misstep early in retirement, that can be a big problem.
Yeah.
And folks that retired in January of 2008, they had a rude awakening by the, end of 2008. And we don't know when that's going to happen, right? I mean, nobody has a crystal ball that says, hey, this is what's going to happen this year. We don't. I mean, I wish I could say I did, but nobody has that crystal ball. And so what that means is that when we do sit down with somebody that's getting ready to retire, that we have to do a better job of running some risk analysis and determining, number one, how much risk are they comfortable with? Because I can tell you back in the day, if I'd sit down and go through one of those little questionnaires that the securities industry uses, most people would come out and they'd be a moderate investor. Mm-hmm. Well, Jen, in 2008, when people thought they were a moderate investor, and a moderate investor would have been down 30 to almost 40% in the market.
Gosh, that's moderate.
They realized real quick that they really weren't a moderate investor. So there had to be a better way to gauge risk. There's been several different companies that have put together some different risk profiles now. And so we bounce between a couple of them because it is important that people know from a numeric standpoint where their risk is in terms of from 0 to 100. And then to use that same criteria to develop and to see where they are in terms of their portfolio. And I'm not going to say always people have more risk in their portfolio than they thought they did, because there's times that they don't have enough risk in their portfolio compared to where they should be. So I see both ends of the spectrum. I will say this, very rarely do I see somebody line up, within 10 points of where they should be on the risk scale. And so that's where I think it's important that folks that are, if you're working and if you're dumping money into your retirement plan, I'm not talking to you. Your risk isn't really a big deal. You can handle the ups and downs in the market. But if you're 10 years out from retirement, this is definitely an area that you need to be cognizant of, right? We need to know what our risk number is, and we need to know what the risk number is of our current portfolio, because we can be way off base and another 08 comes, and now it's not just that my portfolio is down, and now I might have to work another year or 2 years just to give it time to come back. That's what I don't want to see happen, Jen, to folks. And so that's why we developed the financial x-ray. We can x-ray folks' portfolio and determine how much risk is there and make sure it lines up with their risk number. And it's easy to get started. All they have to do is give us a call at 863-285-3815. That's 863-285-3815 to get your financial x-ray. Because that financial x-ray is going to give them a footing going forward to know if they need to make changes within their portfolio. Mm-hmm. The other part of that nobody really sees is how much are they paying in expenses and fees. This financial x-ray will go into that also and really look at how much are they paying in fees and expenses. So again, to get started, all you have to do is give us a call at 863-285-3815. That's 863-285-3815, or go to our website, statlerfinancial.com, and we've got a link to our calendar right there.
Talking today with Phillip Stattler. He is president and CEO of Statler Financial Services right here in Sebring. Again, the website is statlerfinancial.com. They have a lot of great resources available there. There's also a link where you can get right on Phillip's calendar for that initial complimentary phone consultation. Again, go to statlerfinancial.com if you'd like to check all of that out. Stay with us.
This is your captain speaking. We're expecting fair skies, a smooth flight, and about a 85% chance or so of making it to our destination. So sit back, relax, and enjoy the rest of the flight.
Would you stay on that plane? Of course not. Well, do you have a retirement plan where you probably won't run out of money? You need a plan that no matter the destination will help you get to and through retirement successfully. Phillip Stattler and the team at Statler Financial Services can design a plan to help you get to your destination as comfortably as possible, even if Wall Street or the economy causes some turbulence. Call Phillip Stattler and the Statler Financial Services team to start working on your plan. 863-285-3815. That's 863-285-3815. Get a plan designed to allow you to sit back, relax, and enjoy the retirement you've worked so hard for. 863-285-3815. Firm offers insurance services, advisory services offered through Statler Financial Services Incorporated, a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here with Phillip Stattler. He's president and CEO of Statler Financial Services right here in Sebring. Every week he gets questions about all things retirement, so we're going to take a little time here in this part of the show, open up our Statler Financial mailbag, and go over some common retirement questions. So, Phillip, our first question is from Jill, and Jill writes that she and her husband are getting a divorce after being married for almost 30 years. She's been working outside of the home for the last 5 years, so she's got some work friends and a little income of her own, but she feels like she's just starting over and she doesn't even know the questions to ask first. She wants to know some of the things she should think about now that she's planning for her own future.
Well, that's a tough question, Jill.
Yeah.
You need to know, number one, if you're working, if you have a 401k plan, then we need to be making sure that we're making some contributions to that 401k plan. Now, obviously, I'm not an attorney, but an area that you need to at least ask your attorney about is if your spouse has some retirement accounts, can you have access to some of that? Right? Can you roll
Right.
some of that into your IRA? That's an area because that may be, after 30 years of marriage, that may be one of the bigger financial assets that you have is going to be his retirement accounts. So we want to look at that and see if there may be something there that you can grasp and at least help you get started in the right direction and have some assets there to fall back on. But again, if you have a 401k, let's make sure that we're contributing at least enough to get the full match on that part. If there's not a 401k, try to develop some kind of savings plan where you're putting money into a Roth IRA because you'd rather pay the taxes now in the low tax environment we're in versus later when we may be in a higher tax environment. Those are probably a couple things that I would look at right now.
Good questions there, Jill. And that really has become more of an issue that retirement planners like you are dealing with now. I know those divorce rates among people who are getting close to retirement and who are in retirement has really gone up. And there's some big financial ramifications. So just, Jill, you're certainly not the only one who's going through this. So those are some good questions there. Our next question is from Mark, and he and his wife have started having some serious discussions about what they want to do in retirement. Mark has had to travel for work for years, so he wants some peace and quiet, and he wants to go fishing. But his wife stayed home to raise their 2 boys. She's been telling all her friends about all the places that they're going to go once they retire, so they have some different ideas here. Mark says he's done traveling for good, but doesn't know how to tell her. So now what? So how do we make everybody happy here, Phillip? This is a tough situation.
I didn't know that I was going into the marriage counseling business here, Jen.
It's kind of where you are sometimes, right? Oh gosh,
it is, and I can understand both sides. And so I think that there needs to be a discussion, right? We need to sit down and have that discussion about what we expect. And so maybe it's not all or nothing, right? So maybe we travel together once a year, and maybe the rest of the time, she goes ahead and kind of sets up some of the things she wants to do, and he can stay at home and golf or piddle in the yard or whatever he wants to do in retirement. And who knows, a couple of years of doing that, and he may get on that train of, okay, I'm ready to travel again and do some other stuff.
Right.
But, yeah, I think it's having that conversation of what can we do together, and then what do we need to not do together.
Yeah, again, I think with some of these things, also, it just never hurts to get that second opinion before you get something like an annuity or not. Just good to have that second opinion. Right, Phillip?
That and just understanding what you're buying, right? Because it's a product. It has good things. It has bad things, so you need to draw the T account and make sure you understand the pros and the cons of what you're looking at, and make sure you're using somebody that's not just an annuity salesman, because then the only tool they have is an annuity.
Right.
So you know what you're going to get. That doesn't give you an open-minded person that's going to look at your situation and say, here, based on your situation, here's the best thing for you.
Right.
That's not going to happen if you go to an annuity person.
Right.
It's not going to happen if you go to a brokerage firm. You really and truly need to work with somebody that has a fiduciary responsibility to do what's in your best interest. And that's the key, I think, in getting the right mix of investments that you're going to need in retirement.
And that, Phillip, is where we get that phrase when we've talked before about how when you only have a hammer, every problem looks like a nail. And that's what we run into financially sometimes with just the same tool over and over again. Let's do one more question here. This last one comes from Barb, another tough relationship situation. Barb says, my mother just died, and now I feel like all our family does is argue over what to do with her house and who will be in charge of what. My siblings and I are in our 60s, but it feels like we're kids again. I don't know if you can help us with our arguments, but can you please just tell people why it's so important to take care of these decisions ahead of time? Gosh, that's a tough thing to be in, but she's right. We got to take care of this stuff ahead of time, right?
We do. And so there's a couple things here, right? So if mom died without a will, that's a problem. Right. And so the courts are really going to be in charge of how things are then divided up. Mm-hmm. If mom died with a will, the will is going to specify the things she's asking about. Who's in charge? Well, the will is going to say who's in charge. The will is going to say, here's how everything gets divided. So not having that in place can be problematic for the family. And so you don't want to put your family in that situation. You want to at least have a will in place. You want to at least have a power of attorney in place so that somebody can take care of you if you can't take care of yourself. If you have enough assets and you're in a position, maybe you need a trust. I don't know, without looking at your situation. Not everybody needs a trust. More people have a trust than really need one from what I've seen. But there are advantages to having a trust. There could be some advantages of not having a trust, depending on your circumstances. And so that's one of those things that is very dependent upon where you're at and what you're trying to accomplish. You're in a rough spot here because you got siblings all scrabbling over stuff, and that's not good. You know, mom died and now we're fighting over everything. So it's better, folks, listen, if you don't have a will in place, or you haven't attached beneficiaries to your assets, that's why they create TOD, transfer on death, or POD, pay on death, so that you don't have to worry about this kind of stuff. It's taken care of. You've done it ahead of time. So those are some areas I think that you could look at. Obviously, it's too late for you, but a heads up to folks out there that, right, hey, take care of your stuff now so that your kids don't fight over it later. Right. That's right. Not what you want to have happen. And again, I'm not an attorney, but you need to have a relationship with an attorney that can help you set these things up properly, and to make sure that your final wishes are carried out the way you want them to be. Right. Because who wants their kids fighting over stuff? Nobody does. Yeah. But they're doing it. Happens. That's right. And they're doing it because you didn't take action to prevent it. And you could have.
So Phillip, I think that the big message for a lot of people here is just get that planning done. So tell us how we can get in touch with somebody like you to get started on identifying what all the weak spots are and what's going on with our money, what's missing, and how do we get everything in place so we don't leave a mess for our kids.
Absolutely, Jen. They can give us a call. I mean, that's something we do all the time for folks is walk them through that process. Give us a call at 863-285-3815. It's 863-285-3815. Or, Jen, they can go to my website, statlerfinancial.com. There's a link to my calendar right there.
This is the Statler Financial Radio Show. That's all the time we have for this week, but be sure to tune in again next time for more insights from Phillip. We'll talk to you then.
Call Phillip Stattler today to get started on your complimentary financial X-ray report. 863-285-3815. That's 863-285-3815.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of principal. No strategy is guaranteed to be successful.
This radio show is a paid placement.